What does it take to make a government walk away from $500 million every single day and still refuse to blink? Because that is exactly the question sitting at the center of the Iranian regime's calculations right now. $500 million every 24 hours? Gone. Not lost in some abstract economic forecast, not a number buried in a think tank report. Somewhere, actual real money that used to flow into actual government accounts, now simply not arriving. And yet, despite that number climbing higher every single week, despite ministers whispering about empty reserves and unpaid contractors, the regime in Tehran has not backed down. Not publicly, not privately, as far as anyone can tell. So the real question isn't whether Iran is bleeding money. Everyone already agrees on that. The real question is why a government would let itself bleed out financially rather than simply stop the fighting that's causing the bleeding. And once you understand the answer, you'll understand something most headlines never explain about how regimes like this one actually think. Before we go further, if you want to understand the real mechanics behind these decisions, instead of just watching numbers scroll across a headline, hit subscribe right now. This channel exists to break down exactly why governments make the choices they make, even when those choices look irrational from the outside. And this one is one of the clearest examples you'll see all year. Let's start with the number itself, because it's worth sitting with for a moment. $500 million a day is not a modest inconvenience. It's not a rounding error in a national budget. To put it in perspective, that's more than most mid-sized countries collect in total tax revenue in an entire week. It's the kind of number that, in almost any other government on Earth, would trigger immediate, visible policy change within days. Ministers would resign, emergency sessions would be called, currency markets would panic publicly, not just in whispered reports from analysts. And for a while, that's exactly what people expected to happen in Iran too. Analysts predicted that once the financial pain became undeniable, once ordinary Iranians started feeling it in the price of bread and the value of their savings, the pressure from inside the country would force the regime's hand. Diplomacy would resume. A deal would get signed. The bleeding would stop because no government, no matter how ideologically committed, can operate indefinitely without money. That prediction hasn't come true. And the reason it hasn't come true tells you almost everything you need to know about how this regime actually survives. To understand why, you have to stop thinking about Iran's government the way most people instinctively think about governments, as a single unified actor making rational cost-benefit calculations the way a business might. That mental model works fine for most countries. It completely breaks down here. Because the Islamic Republic isn't one thing making one decision. It's a fragile, overlapping arrangement between several competing power centers, each with its own survival instincts, its own fears, and its own reasons for refusing to back down. Even when backing down would be the economically rational thing to do. At the very top, you have the clerical leadership, the religious authorities who claim ultimate legitimacy over the state. Their power isn't built on economic performance. It never has been. Their power is built on the claim that they represent something eternal, something above ordinary politics. For that leadership, backing down under financial pressure isn't just a policy reversal. It's an admission that the sacred project they've spent over 4 decades building can be bought out by an outside power simply applying enough economic squeeze. That is not a small thing to admit. That's an identity-level collapse, not a budget line adjustment. Below them, you have the Islamic Revolutionary Guard Corps, the organization that actually runs much of the security apparatus, controls enormous portions of the economy, and most importantly, is the institution that keeps the clerical leadership physically in power. The Guard doesn't experience this financial pressure the same way ordinary Iranians do. Sanctions and blockades hurt the general population first and hardest, long before they meaningfully touch the inner financial networks the Guard has spent decades building, specifically to survive exactly this kind of pressure. Shadow fleets, discounted oil sales routed through intermediaries, barter arrangements that never touch a traceable bank account. The Guard didn't build those systems last month. They built them over years, anticipating exactly this scenario. So when you hear that Iran is losing $500 million a day, understand that the number is real, but the pain from that number is not evenly distributed. It's absorbed first by the people who have the least power to change anything, and last, if ever, by the people who actually make the decisions. And underneath both of them, you have tens of millions of ordinary Iranians who have spent years absorbing the consequences of decisions made far above their heads. Rising prices, vanishing savings, medicine shortages, and now, on top of years of accumulated strain, a fresh $500 million a day disappearing from a system that was already stretched to its limit. Here's the uncomfortable mechanic sitting underneath all of it. The clerics stay in power because the Guard is willing to enforce that power, sometimes brutally, against the population. And the Guard stays loyal, not out of some unbreakable ideological devotion, but because loyalty has historically been paid for, in salaries and business privileges and status and access, to smuggling networks and construction contracts and telecommunications monopolies, oil money is what has funded that loyalty for decades. So when outside pressure targets oil revenue, it isn't just hurting a government's budget, it's threatening the payment system that keeps the entire structure from turning on itself. Which brings us to the actual answer to the question in the title. Why won't Iran back down even while losing $500 million every single day? Because for the people who actually control the decision, backing down might be more dangerous than losing the money. Let that sink in for a second, because it's counterintuitive and it's the whole story. If the clerical leadership visibly capitulates to outside pressure, if they sign an agreement that looks like surrender, if they publicly abandon programs they've spent decades telling their own population were non-negotiable matters of national sovereignty, they don't just lose international prestige. They risk something far more dangerous to a regime like this one. They risk looking weak in front of the exact institution that keeps them physically safe. Hardline factions inside the Revolutionary Guard, inside the security services, inside the political establishment, are watching every single move the leadership makes right now. And in a system held together by fear and loyalty rather than genuine popular consent, looking weak in front of your own enforcers is often a far more immediate threat than losing money ever could be. Money can be replaced. Money can be smuggled, borrowed, rerouted, delayed. A collapse in the perception of strength, once it happens, is extraordinarily difficult to reverse. So the $500 million a day isn't being weighed against the cost of continuing the conflict. It's being weighed against something that doesn't show up on any balance sheet at all, the survival of the people currently sitting at the top of that pyramid. Now, here's where this gets even more interesting, because it isn't just about internal power dynamics. There's a second layer to this that almost nobody talks about, and it has to do with what economists sometimes call the sunk cost trap, except applied at a scale most people never think about. This regime has already spent decades and an enormous amount of money, prestige, and political capital building the infrastructure, alliances, and narrative that got it to this point. Missile programs, regional proxy networks, a nuclear program built up over years despite sustained international pressure. Walking away from that now, under financial duress, doesn't just cost them the current fight. It would mean admitting that decades of investment and sacrifice, some of it paid for in the lives of their own citizens and soldiers, was ultimately abandoned the moment the money got tight. For a leadership whose entire legitimacy rests on the claim that they are playing a long, patient, historic game against Western pressure, that kind of visible reversal isn't just embarrassing. It potentially undermines the entire founding myth of the government itself. If you're starting to see how deep this actually goes, make sure you're subscribed, because the next part explains exactly how Iran is quietly trying to survive this financial squeeze, and why the methods they're using are running out faster than most people realize. Let's talk about how a government actually survives losing that kind of money without immediately collapsing, because the mechanics here are genuinely fascinating from a strategic standpoint. You don't run out of money the way a household does, all at once, with an empty account and unpaid bills piling up on a kitchen table. Governments, especially ones that have spent years preparing for exactly this kind of pressure, have layers of financial cushioning they can draw down before the pain becomes visible at the top. The first layer is foreign currency reserves, money that's been stockpiled over years, specifically for moments like this one. Every day the blockade continues, those reserves shrink a little further. Estimates vary, and precise figures are notoriously difficult to confirm from outside the country, but the direction is not in dispute. Reserves that were already strained by years of prior sanctions are being drawn down at a pace that cannot continue indefinitely. The second layer is the shadow economy, the vast, deliberately obscured network of intermediaries, front companies, and reflagged tankers that Iran has spent years building specifically to keep some oil moving even under sanctions. This system was never designed to replace full, open trade. It was designed to keep a trickle flowing, enough to fund the most essential parts of the state. Even when the front door to global markets is closed, that trickle is real. It's part of why the regime hasn't collapsed overnight despite the daily losses. But a trickle is not a substitute for a river, and every week this continues. The gap between what the shadow economy can provide and what the state actually needs to function keeps widening. The third layer, and possibly the most fragile one, is domestic tolerance. This is the layer that doesn't show up in any financial report, but it might be the one that matters most. How long can ordinary people absorb rising prices, shrinking subsidies, and vanishing purchasing power before frustration turns into something the regime can no longer manage quietly? Nobody, including the people running the country, actually knows the exact answer to that question. And that uncertainty itself becomes part of the calculation. Because if leadership genuinely doesn't know how close they are to a domestic breaking point, the safest political move, from their own survival perspective, isn't necessarily to fix the underlying problem. It's to project total confidence publicly, no matter what's actually happening behind closed doors, There's a fourth layer too, one that rarely gets discussed but matters enormously: external lifelines. No modern economy under pressure operates in complete isolation, and Iran is no exception. Relationships with a small number of major trading partners, willing to continue purchasing discounted oil despite international pressure, function as a kind of pressure valve, releasing just enough strain to keep the system from reaching a full breaking point. These relationships aren't acts of charity. They're driven by the purchasing country's own economic self-interest, discounted energy in exchange for political leverage and strategic access. But from Iran's perspective, the practical effect is the same either way: a partial offset against the daily losses, enough to keep essential state functions running even as the broader economy continues to erode. The durability of this fourth layer depends heavily on decisions made in capitals far from Tehran, decisions that Iran's own leadership has limited ability to control or predict, which adds yet another layer of uncertainty to an already unstable equation. Which brings us to something worth watching closely, because it tells you far more than official statements ever will. Pay attention not to what the regime says to the outside world, but to what it says to its own people. State media inside Iran has continued projecting an image of strength, resilience, and control, even as independent estimates suggest the financial situation is deteriorating by the week. On the surface, that might look like simple propaganda, the kind every government under pressure produces. But think about who that messaging is actually built for. It isn't designed to convince foreign markets or foreign governments that everything is fine. Outside observers have their own data and aren't relying on state broadcasts to understand Iran's financial position. That messaging is for the population still living inside the country, a population that needs to believe their government remains strong and in control, especially at the exact moment when the evidence around them might suggest otherwise. And there's a pattern worth noticing here. The more elaborate and confident that messaging becomes, the more it often reveals about how uncertain the people producing it actually feel behind the scenes. Now let's talk about something that makes this financial standoff even harder to predict, something that goes beyond spreadsheets and reserve estimates entirely. It's about how authoritarian systems process bad news internally, and it's very different from how we might assume. In a lot of governments, especially ones with a free press, independent institutions, and competitive elections, bad economic news travels upward quickly and accurately because leaders who ignore it get punished at the ballot box or in the media. That feedback loop doesn't really exist here. In a tightly controlled system like Iran's, officials at every level have strong incentives to tell leadership what leadership wants to hear, not necessarily what's actually true. Reporting a problem, honestly, can be read as disloyalty. Reporting confidence, even false confidence, is safer for your own position. Multiply that dynamic across an entire government bureaucracy, and you get something dangerous. A leadership structure that may genuinely not have an accurate, unfiltered picture of exactly how close to the edge their own financial system actually is. That's not a comforting thought. A government that fully understands the scale of the danger it's facing might eventually be forced by that clarity to make a hard, pragmatic decision. A government insulated from that clarity by layers of self-protective reporting might simply keep going, absorbing damage it doesn't fully realize is accumulating, right up until something breaks that can't be quietly patched over. If this kind of honest breakdown of how these systems actually work is something you want more of, tap that like button right now. It genuinely helps this video reach more people who are tired of surface-level headlines and actually want to understand the mechanics underneath them. Let's shift now to the other side of this equation, because so far we've mostly talked about why Iran hasn't backed down, but there's an equally important question sitting right next to it. Why does the outside pressure keep being applied, even though it clearly hasn't produced the capitulation many expected? What's the actual strategic logic behind continuing to apply financial pressure that, so far, has not visibly changed Iran's public position? The answer lies in understanding what this kind of economic pressure is actually designed to do versus what people often assume it's designed to do. Most casual observers imagine sanctions and blockades as a kind of on-off switch. Apply enough pressure and the target government simply gives up, the way a person might raise their hands when a demand becomes impossible to refuse. That's almost never how it actually works. And any strategist who has studied economic pressure campaigns historically will tell you the same thing. Financial pressure like this isn't designed to produce an instant capitulation. It's designed to slowly, deliberately narrow the range of choices available to a government over time, forcing increasingly painful trade-offs between competing priorities that used to be easier to balance. Right now, somewhere inside Iran's government, there are officials being forced to make choices that didn't need to be made a year ago. Do you prioritize keeping security forces fully paid and loyal? Do you maintain subsidies that keep basic goods affordable for the general population? Do you continue funding regional military programs and allied groups abroad? A year ago, with oil revenue flowing more freely, there was enough money to at least partially fund all three simultaneously, even if imperfectly. That's no longer guaranteed. And every week, the financial pressure continues. That triangle gets tighter, forcing harder choices between security loyalty, public stability, and external military ambition. This is exactly the outcome sustained. Financial pressure is built to produce, not a single dramatic surrender, a slow, grinding narrowing of options until the government is eventually forced to choose which part of its own foundation it's willing to sacrifice to protect the rest. There's a historical pattern worth understanding here too, because this situation isn't happening in a vacuum. Regimes under sustained economic pressure throughout history have shown remarkably similar behavior patterns, and it's worth being honest about what history actually teaches, rather than what we might wish it taught. Some regimes under this kind of pressure have eventually reached breaking points that led to real, meaningful policy shifts. Others have proven far more resilient than outside analysts predicted, absorbing enormous economic pain for years, sometimes decades, without the kind of collapse or capitulation that seemed inevitable from the outside. The uncomfortable truth is that raw financial pain alone doesn't reliably predict how quickly, or even whether, a government changes its behavior. What tends to matter more is the internal political calculation happening underneath that pain, exactly the calculation we walked through earlier about survival, hardline perception, and sunk cost. This is why so many predictions about Iran caving under financial pressure have consistently underestimated how long this could actually continue. Analysts kept applying a rational, business-like model to a government whose actual survival logic doesn't run on rational economic terms at all. It runs on the much messier, much more dangerous logic of internal power preservation. It's worth looking at how other governments have handled similar pressure. Not because history repeats itself exactly, but because the patterns are genuinely instructive. Consider a government that spent years under some of the harshest sanctions ever applied to a modern state, cut off from most of the global financial system, watching its currency collapse and its population endure real hardship year after year. Outside analysts predicted repeatedly that the pressure would eventually force capitulation. It took far longer than almost anyone expected, and when change eventually came, it didn't arrive as a dramatic public surrender. It arrived quietly through back-channel negotiations, gradual policy shifts, and face-saving language that allowed leadership to claim victory even while making real concessions. Compare that to a different case. A government facing comparable economic isolation that never meaningfully changed course at all, absorbing decades of pressure while its population endured extraordinary hardship, right up to the present day. The difference between these two outcomes wasn't primarily about how severe the economic pain was. Both governments faced genuinely brutal financial conditions. The difference was about the internal structure of power in each case, how tightly control was held, how dependent leadership was on a narrow security apparatus, and how much political capital had been invested in the specific policies under pressure. Iran's leadership almost certainly studies these same historical cases closely, drawing lessons about which strategies bought time, which triggered internal fracture, and which allowed a face-saving off-ramp without looking like defeat. Even governments with years of advanced planning and enormous resources can find themselves outmaneuvered when the pressure campaign against them adapts faster than their contingency plans anticipated. That last point matters more than it might initially seem. Nobody at the top of a system like this wants to be remembered as the leader who caved. But almost every leader in this position wants to eventually find a way out that doesn't look like caving. Understanding that distinction is often the key to understanding why negotiations in situations like this drag on so much longer than the economic logic alone would suggest they should. It isn't only about finding numbers both sides can accept. It's about finding language, sequencing, and public framing that lets the side under pressure walk away from the table looking like they held their ground, even if the substance of what they agreed to represents a real retreat. Now let's talk about the pipeline question, because there's a detail here that a lot of casual observers completely miss, and it says a great deal about how far ahead Iranian planners were actually thinking, even years before this exact standoff began. Iran has spent years quietly developing infrastructure specifically designed to reduce its dependence on traditional oil export routes that are vulnerable to exactly the kind of blockade currently draining $500 million a day from the country's finances. This wasn't built as a reaction to the current crisis. Infrastructure at that scale takes years of planning, enormous capital investment, and sustained political commitment across multiple government administrations. The fact that it exists at all tells you that Iranian strategists understood a long time ago that their traditional export routes weren't guaranteed to remain open forever, and they tried to build their way around that vulnerability in advance. The problem, and this is the part that matters most right now, is that alternative infrastructure only helps if it's actually operational at the scale needed to offset what's being lost, and if it isn't itself caught inside whatever pressure campaign is currently underway. Years of investment can be neutralized in an afternoon if the endpoint of that investment turns out to fall inside the same blockade zone it was specifically built to avoid. We don't have full public confirmation of exactly how much alternative export capacity is currently operational versus how much remains theoretical on paper, but the broader lesson here applies well beyond this one pipeline. Let's talk numbers again for a moment, because the scale of this financial squeeze deserves a closer look. Independent estimates of daily losses in the hundreds of millions of dollars translate, over just a few months, into tens of billions of dollars in cumulative impact. That is not a number any economy can absorb indefinitely without consequences, rippling outward into every part of daily life. Currency depreciation. Inflation on imported goods, including medicine and basic food staples. Reduced capacity to maintain infrastructure, from power grids to water systems, that ordinary citizens depend on every single day. These aren't abstract statistics. They translate directly into the lived experience of tens of millions of people who had no role whatsoever in the decisions currently driving the standoff. And this is exactly why the financial pressure strategy is considered so different, and in some ways more effective over time, than direct military strikes alone. Military strikes damage specific targets, buildings, equipment, infrastructure, but they don't necessarily touch the underlying financial system that funds a regime's ability to rebuild and rearm. Sustained financial pressure targets something much harder to repair quickly, the actual liquidity that keeps every other part of the system functioning. You can rebuild a damaged missile facility in months if you have the money to pay for it. You cannot rebuild depleted foreign currency reserves nearly as quickly, no matter how much political will exists to do so. So where does this actually go from here? Because understanding the mechanics is one thing, but the far more interesting question is what happens next. And there are really three broad paths this could take, each with very different implications. The first path is continued endurance. Iran keeps absorbing the daily losses, drawing down reserves, leaning harder on shadow trade networks, and managing domestic unrest through a mixture of subsidies, propaganda, and selective repression, betting that outside pressure will eventually ease before the internal structure actually breaks. This is, in many ways, the path the regime has already chosen simply by continuing to exist without a dramatic policy reversal. It's a bet that time is ultimately on their side, that international attention will eventually shift elsewhere, that global politics will create openings for sanctions, relief, or renewed trade relationships down the road. History gives this bet some support. Regimes have outlasted pressure campaigns before, but history also shows that this bet doesn't always pay off, and when it fails, it tends to fail suddenly rather than gradually. The second path is internal fracture. This is the scenario analysts watch most closely, precisely because it's the hardest to predict, and often the hardest to see coming until it's already underway. If the financial pressure eventually forces genuinely painful trade-offs between paying security forces and maintaining basic public stability, cracks can begin appearing not in public protests necessarily, but inside the power structure itself. Disagreements between hardline and more pragmatic factions over how to handle the crisis. Quiet resentment building inside institutions that feel they're being asked to absorb the cost of decisions made by leadership they don't fully control. This kind of fracture rarely announces itself with a single dramatic headline. It tends to build slowly, beneath the surface, the same way financial pressure itself accumulates before becoming visible. The third path, and arguably the most consequential one, is a genuine strategic recalculation at the top. Not necessarily a dramatic public capitulation, which we've already established the leadership has strong incentives to avoid, but a quieter, more gradual shift in policy that allows the regime to change course without it looking like the surrender its own hardline factions would punish. This is often how entrenched governments actually change behavior under sustained pressure, not through a single visible reversal, but through a series of smaller, deniable adjustments that eventually add up to a meaningfully different position, all while public rhetoric continues projecting unwavering strength. If this path is unfolding, it likely won't be obvious in any single week. It would show up gradually in shifting negotiation positions, in quiet diplomatic signals sent through intermediaries rather than public statements, in subtle changes to how aggressively certain proxy activities continue. It's also worth considering a fourth possibility that doesn't fit neatly into any of the first three, because real situations rarely resolve as cleanly as a three-path framework suggests. It's entirely possible that different factions within the regime are simultaneously pursuing different strategies at once, not because there's a single coordinated plan, but because the power structure itself is fragmented enough that no single strategy is actually being executed consistently. One faction might be quietly signaling openness to a negotiated settlement through back channels, while another faction, operating with real autonomy over military assets, continues provocative actions that undercut those same negotiations. This isn't necessarily a sign of deliberate strategic complexity. It can just as easily be a sign of a government that has lost some of its internal coordination under the weight of sustained pressure, where different institutions are making decisions based on their own survival calculations, rather than a single unified national strategy. If that's what's actually happening, it would help explain something that has puzzled outside observers throughout this standoff: why Iran's public messaging and actual behavior on the ground have sometimes seemed to point in contradictory directions within the same week. Each of these paths, plus the possibility of fragmented, contradictory decision-making happening simultaneously, carries real risk, and it's worth being honest that nobody outside the innermost circle of Iranian leadership actually knows with certainty which path is currently being taken, or whether leadership itself has even settled on one consistent approach. What we can say with confidence is that the assumption many observers made early in this standoff, that $500 million a day in losses would quickly force a visible capitulation, has already proven incomplete. The money is real. The pain is real. But the survival calculation happening inside that leadership structure runs on a different logic than pure economic rationality, and until that internal calculation shifts, the financial losses alone, no matter how large they grow, may not be sufficient to change the regime's public posture. There's a broader lesson here too, one that extends well beyond this specific standoff, and it's worth sitting with honestly rather than reducing to a simple takeaway. We tend to assume that economic pain functions like a universal language, that enough financial suffering will eventually force any government to change course, regardless of ideology or political structure. But governments built primarily on fear, loyalty, and internal power. Preservation don't necessarily respond to economic pain the way governments built on public consent and economic performance do. For a government whose survival depends on convincing a small circle of armed loyalists that surrender is more dangerous than continued suffering, $500 million a day might genuinely be a price worth paying, not because the leadership doesn't understand the cost, but because they've calculated, rightly or wrongly, that the alternative cost is even higher. That's an uncomfortable thing to accept, because it means the financial pressure alone, however severe, may not be the deciding factor most people assume it is. It's one piece of a much larger, messier calculation involving fear, legitimacy, historical narrative, and the raw survival instincts of a small number of people who ultimately don't answer to the population absorbing most of the actual pain. There's also a moral dimension worth acknowledging honestly here, because it's easy to get lost entirely in strategy and numbers and forget that real people are living through the consequences of this standoff every single day. Ordinary Iranians, who had no role whatsoever in the decisions driving this conflict, are the ones absorbing the sharpest edges of this financial pressure first. Rising prices, shrinking access to medicine, currency that buys less every month than it did the month before. Whatever the eventual outcome of this standoff turns out to be, that human cost is already real, and it's already being paid, largely by people who have the least power to change any of the decisions currently being made above them. It's worth pausing on what that actually looks like in daily terms, rather than letting it remain an abstract idea. It means a parent quietly recalculating what medicine they can still afford this month compared to 3 months ago. It means a small business owner watching the cost of imported materials climb faster than their prices can reasonably follow, forcing layoffs that have nothing to do with how hard anyone worked or how well any business was run. It means families delaying medical procedures, rationing what used to be routine purchases, and absorbing a slow, grinding erosion of stability that never makes it into a single dramatic headline, because it doesn't happen all at once. It happens gradually in 1,000 small decisions made by people who never had any voice in the negotiations, the blockade, or the strategy driving any of it. And that raises a harder question that doesn't have a comfortable answer. Is sustained financial pressure, even when it's specifically designed to avoid direct military casualties, actually a more humane form of conflict? Or does it simply relocate the suffering somewhere quieter, somewhere further from cameras and headlines, without meaningfully reducing the total amount of pain being inflicted? Reasonable people disagree on that question, and anyone who claims to have a clean, comfortable answer to it is probably oversimplifying something genuinely complicated. What we can say with real confidence is this: the $500 million a day figure isn't just an economic statistic, it's a pressure test, actively running in real time, on a specific theory about how authoritarian survival actually works. The theory says that if you apply enough sustained financial pain, eventually the internal cost of continuing outweighs the internal cost of backing down, and the government changes course. So far, that theory hasn't produced the outcome many expected, and the reason isn't that the pressure is too weak. It's that the internal cost of visibly backing down, for this specific leadership facing this specific internal power structure may currently be calculated as even higher than the cost of losing $500 million every single day. Whether that calculation holds indefinitely or whether it eventually breaks under its own accumulating weight is genuinely one of the most consequential open questions shaping this entire conflict right now. Reserves don't refill themselves. Shadow trade networks have real limits. Domestic tolerance for hardship, however deep it currently runs, is not infinite. Somewhere out there, quietly, a number exists that this system genuinely cannot absorb without breaking. Nobody outside that innermost circle knows exactly what that number is, and there's real reason to doubt whether the people making these decisions know it with any real precision either. What makes this moment particularly worth watching closely is that all four pressure points we've talked about, shrinking reserves, a strained shadow economy, uncertain domestic tolerance, and unpredictable external lifelines, aren't operating independently of each other. They're compounding. A weaker reserve position makes the shadow economy's trickle of revenue matter more, not less. Reduced external support makes domestic subsidies harder to maintain, which in turn tests the very domestic tolerance the regime is counting on to hold steady. Each strained layer places more weight on the layers still standing, and there's no guarantee those remaining layers can absorb the redistributed pressure indefinitely. This is often how systems like this one actually fail, when they do fail. Not through one single catastrophic blow, but through a slow accumulation of smaller strains across multiple systems simultaneously, until one relatively minor additional shock, something that on its own would have been entirely survivable, ends up being the one the whole structure can no longer absorb. That's part of what makes predicting the outcome here so genuinely difficult, even for people with far more access to intelligence and financial data than any outside observer will ever have. It's not simply a matter of watching one number, whether that's foreign reserves or daily oil losses, and waiting for it to cross some known threshold. It's a matter of watching several interconnected systems degrade at once, none of which has a publicly known breaking point, all of which are influencing each other in ways that are extraordinarily difficult to model from the outside. Analysts who confidently predict an exact timeline for when this pressure will force a change in Iran's behavior are almost certainly overstating their own certainty. The honest position is one of informed uncertainty. The trajectory is clear, the direction is clear, but the exact moment when accumulated strain becomes visible, collapse is genuinely unknowable in advance, even to the people inside the system experiencing it. So the honest answer to the question in the title isn't that Iran is somehow immune to the pain of losing $500 million a day. It clearly isn't. The honest answer is that the people making the decision to keep absorbing that pain aren't the same people paying the sharpest price for it, and as long as that gap between who decides and who suffers remains as wide as it currently is, the money alone, no matter how staggering the number gets, may not be the thing that finally forces a change in course. If this video helped you actually understand the real mechanics behind a story that most headlines reduce to a single scary number, that's exactly why this channel exists. Subscribe, share this with someone who's tired of the 30-second version of complicated stories, and I'll see you in the next one, where we go even deeper into the decisions quietly shaping the world around us.